We're jumping straight into NuScale Power today. Everyone is watching the price action, but the real story is the collision of AI energy demand and regulatory monopolies.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds of nuclear physics and, balance sheets, do us a quick favor, subscribe and hit that like button.
It really does help the algorithms simplify markets for more people.
It does.
Yeah.
And honestly, it helps us keep the lights on too. Speaking of which, keeping the lights on is really what this is all about. We are looking at maybe the most volatile, high-stakes way to power the whole AI revolution.
Oh, volatile is putting it mildly. If you've been watching the charts on NuScale, ticker SMR, you might need a neck brace.
Right.
I mean, we're looking at a 52-week range that is frankly nauseating for the faint of heart. We've seen it swing from around $11 all the way up to over $57.
And then just as fast, it comes crashing back down.
Exactly. A really sharp correction.
It's been a total roller coaster. Recently, we saw it bounce back into that, $19 to $20 range. But what really caught my eye was the technical setup. Just before that bounce, we saw a classic signal.
You're talking about the RSI.
The relative strength index, exactly. It dropped below 30. For anyone, new to the charts, that is the textbook definition of oversold.
It's that flashing red light.
It is. It's where the algorithms just kick in and say, okay, the selling has gone too far. Time to be greedy when others are fearful.
Which is exactly what we saw happen. But we're not just here to talk about lines on a chart or, technical bounces. We need to understand what people are actually buying here.
Yeah.
Because let's be really clear, this is not your grandfather's utility stock.
Yeah.
You are not buying a steady dividend payer like Duke Energy.
No. This is a venture capital bet that just happens to be trading on the public markets.
It's a bet on small modular reactors, SMRs, becoming like the essential battery pack for the entire AI ecosystem.
That's the whole thesis right there. But to understand why the market is so obsessed with this specific company, despite the financials, which we will get to, you have to understand the moat.
Right, the moat.
And usually when we talk about a moat, we mean like a brand like Coca-Cola or a network effect like Facebook. But in nuclear energy, a moat is made of paper.
Thousands and thousands of pages of paper. It's all about the Nuclear Regulatory Commission, the NRC.
Mm-hmm.
And NuScale holds the crown jewel here. They are the only company with an NRC-approved design for a small modular reactor, specifically their 77-megawatt module.
I want to pause on that because I don't think people really get the sheer magnitude of that sentence. NRC approved.
No, they don't.
This isn't like getting a permit to build a deck in your backyard where you pay $50 and wait a week.
Not even close. The NRC is arguably the strictest, most bureaucratic regulatory body on the planet. Getting a nuclear design approved is a gauntlet. It takes years, sometimes decades.
And millions of dollars.
Hundreds of millions of dollars in engineering studies, safety simulations, legal fees, you name it.
So while there are a dozen other startups out there with cool PowerPoint decks and, nice renderings of futuristic reactors.
NuScale has the stamp.
They have the stamp.
And that creates a massive time-to-market advantage. If a utility company wants to build an SMR today, NuScale is the only one with a legally viable design.
So the competitors are just years behind in that process.
Years. They are still doing the homework. NuScale has already passed the final exam.
There's another layer to this moat that I found really interesting. It's about the technology itself. NuScale isn't trying to, reinvent physics here. They're using light water reactor technology.
Right. And this is crucial for let's call it the investability of the company. Light water tech is the standard. It's what the vast majority of existing nuclear plants have used for 60 years.
So they aren't trying to build some reactor that runs on liquid sodium or thorium or some experimental fuel that needs a whole new supply chain.
Exactly. They are taking proven physics and just shrinking the form factor. This matters because the supply chain for light water parts, it already exists. We know how to make the fuel. We know how the pumps work.
It just lowers the risk.
It significantly lowers the execution risk compared to some of the science projects out there masquerading as public companies.
It's the difference between building a smaller, more efficient car engine versus trying to invent a warp drive. One is an engineering challenge. The other is a scientific discovery challenge.
That's a great way to put it. So you have the regulatory approval, you have the proven tech. But the question is, who is going to buy these things? Why is this stock hyping now?
And that brings us to the AI and data center narrative. This feels like the main driver of the hype train right now. It's the macro tailwind that changes the entire story.
It is. We talk a lot on the show about AI chips, NVIDIA, AMD, and the software side. We rarely talk about the electricity bill. Training these massive models takes obscene amounts of power. A hyperscale data center consumes electricity like a small city.
And the critical factor here is the type of power they need. It has to be on 24/7. The servers can't just shut down because the sun went down or the wind stopped blowing.
Exactly. They need firm power. Wind and solar are fantastic, but they're intermittent. You need massive battery backup to make them firm, which gets incredibly expensive at that scale. A data center needs 99.999% uptime.
And nuclear is pretty much the only carbon-free source that fits that bill. It's always on.
It is always on.
So NuScale is positioning itself as the shovel seller for this digital gold rush. If you want to build the brain of the future, you need NuScale's heart to pump the blood.
That is the pitch. And we are finally starting to see that narrative turn into a tangible pipeline. It's moving from concept to contract. Look at the agreement with the Tennessee Valley Authority, TVA, and Entray One.
Right, that agreement targets up to what, 6 gigawatts of capacity?
6 gigawatts, that is massive. To put that in perspective, 1 gigawatt can power about 750,000 homes.
Wow.
So we're talking about powering millions of homes or a whole lot of H100 GPU clusters.
So what does a deal like that actually signal to the market? I mean, is it a binding deal?
Well, it establishes NuScale as a first-mover vendor of choice for a major utility consortium. And utilities are notoriously risk-averse.
Nobody wants to be the first guinea pig.
Nobody. They all want to be the first to be second. So TVA stepping up like this, it validates the technology in the eyes of the entire market. It breaks the stalemate.
And it's not just domestic, is it? There's the RoPower project in Romania.
Yes. That's a plan for a 6-module plant. It provides that international option value. It shows this isn't just a U.S. story, it's a global energy security story. Eastern Europe is desperate to get off Russian gas, and SMRs are a very attractive way to do that.
Okay, I want to pivot to the financials, because this is where the story gets a little tricky. If you just glance at their recent earnings, the gross margins look surprisingly high, like 67%.
Yeah.
If I didn't know better, I'd think this was a sauce company, not a heavy industrial manufacturer.
It is deceptive, isn't it? But there's a real nuance there. The revenue right now isn't from selling hardware. They aren't shipping reactors yet.
So where's the money coming from?
High-value engineering services. They are selling the blueprints and the consulting.
Ah, so they're selling the intellectual property and the design work to prepare these sites.
Exactly. It's high-margin stuff. It's basically just selling brain power at this point.
But eventually they have to start, bending metal and pouring concrete.
And when they do, that margin profile will change. It'll look a lot more like a traditional industrial company. But for now, Wall Street is looking past the current P&L. They're looking at the potential. Consensus price targets are hovering around, $32 to $33?
But I've seen some of those discounted cash flow models that, if you believe the growth curves, they suggest an intrinsic value over $50 as these deployments scale up.
That's the blue sky scenario. And we've seen the so-called smart money positioning for it. You see these volume spikes on the dips, which suggests institutions are accumulating shares. Plus, short interest has been declining slightly.
Which hints that maybe the bears are getting a little nervous about a potential squeeze.
It just creates a very interesting setup. You have technical support, fundamental tailwinds, and institutional interest all sort of converging.
Okay, that sounds fantastic. The future is nuclear. NuScale has the license. AI needs the power. We're all going to be rich. But let's look at the flip side, because this trade is not free. And frankly, looking at that chart, there are huge drawdowns for a reason.
Absolutely. We have to address the elephant in the room, and it's a big one: dilution and cash burn.
The numbers are pretty stark. Trailing revenue is only about $64 million, but the net loss, almost $380 million.
And free cash flow is negative to the tune of $200 million. This is a company that is burning furniture to keep the house warm right now.
So let's explain how they keep the lights on if they're losing that much money.
They print stock. It's that simple. They have an at-the-market offering program, an ATM, for $750 million. And they recently doubled their authorized shares to $662 million.
Let's translate at the market for someone who might not trade actively.
Okay, imagine you own a slice of a pizza. The company needs money, so they just keep cutting the pizza into more and more slices and selling them to new people. Your slice technically stays the same size, but it represents a smaller and smaller percentage of the whole pie.
Right. Unless the pizza itself, the company's total value gets bigger faster than they're slicing it.
Precisely. That is the race. The company is capital-rich but cash-consuming. They have money to survive, but only because they keep asking investors for more of it. As a shareholder, you are constantly fighting against the tide of new shares hitting the market.
And that leads right into execution risk. I mean, we call them pre-commercial for a reason. There are 0 NuScale plants actually operating today.
It's all on paper and in the lab. Investors have to be willing to stomach what we call the J-curve.
Explain the J-curve.
Picture the letter J. You start at the top left, then you drop down. That's the heavy spending, the construction, all the regulatory hurdles. You go deep into the negative. That's the valley of death. You have to survive that bottom hook before you hopefully shoot up into profitability on the right side.
And NuScale is currently where on that J?
We are sitting right at the bottom, deep in the valley of spending. We have not started the climb up the other side yet.
And while we sit in that valley, there's this overhang looming over the stock. We have to talk about Fluor.
Right. Fluor is a major engineering firm. They were one of the original massive backers of NuScale. They owned a huge chunk of the company. But recently, they've made it pretty clear they plan to divest or monetize that stake.
That scares the market, doesn't it? It kind of feels like the parent kicking the kid out of the house.
It does. It signals that maybe the smart money inside the building wants out. But just from a trading perspective, it's simple supply and demand. If a huge shareholder is looking to sell, that creates constant selling pressure. It puts a lid on the stock price.
Because every time it rallies.
The market worries Fluor will use that liquidity to dump more shares.
And briefly, there's some litigation noise too, right? I saw some headlines.
Yeah, Robbins-Geller has a securities investigation going on about statements and omissions. To be fair, these are pretty common with volatile stocks like this. Whenever a stock drops hard, the lawyers circle.
Sure.
But it adds a layer of uncertainty. You never really want to see class action in your newsfeed.
No, you don't. And finally, on the bear side competition. Just because NuScale is first doesn't mean they're going to be alone forever.
Far from it. Conventional nuclear isn't dead. Large reactors are still being considered. And you have other SMR designs chasing them, like TerraPower or X-Energy. Even with the NRC lead, everyone is fighting for the same grid connections and the same utility contracts.
So we have a clear battleground. On one side, you have the only approved tech in a market that is starving for power, driven by the biggest trend in history, AI.
And on the other, a cash-burning machine that's diluting shareholders while big backers are looking for the exit.
So if you're holding this stock, or even thinking about it, what are the triggers? What are we watching?
Okay, the first big one is upcoming earnings. Likely the Q4 results coming in early May 2026.
But we're not looking for profit, right? We know they lost money.
Correct. Ignore the EPS line. It's going to be negative. You need to look at 2 things: backlog growth and cash burn rates. Are they signing more deals, and how fast are they spending money?
And we specifically need to see those MOUs, the Memorandums of Understanding, convert into binding contracts.
That is the critical distinction. An MOU is like a handshake. It shows interest. A contract is a marriage license. It involves a check. We need to see the checks.
We also need to see specific updates on the TVA and Entry 1 site selection.
Exactly. Where are they actually going to build these things? Real estate matters. And on the international side, any financing news about the RoPower project in Romania would be a massive catalyst. If the U.S. Export-Import Bank or European funding comes through, that de-risks the whole project.
And on the macro side, keep an eye on the Department of Energy.
Yes. The DOE is the kingmaker here. Watch for new funding tiers, executive orders, anything that supports SMR deployment. Government money is non-dilutive.
It's free money.
It's the best kind of money for a shareholder because it extends the runway without slicing your pizza any thinner.
Okay, and finally, let's look at the technical levels. Where are the lines in the sand on the chart?
To the upside, watch that $28 to $35 range. That's where a lot of analyst targets are. And it's likely to be heavy resistance. If it breaks through 35 with volume, things could get very interesting.
And to the downside, what's the floor?
The mid-teens. That $14 to $15 area seems to be the support zone where buyers have been stepping in. If it breaks below that, the dilution narrative is probably winning, and we could see a revisit of single digits.
Okay, so let's unpack this for the final takeaway. NuScale is what we would call a high beta play.
It is the definition of high beta. It moves faster and harder than the market. It's a volatile, binary bet on the future of energy infrastructure.
So this is not a set-it-and-forget-it stock. This is not a safe place to park retirement money if you need it next year.
No. This is a venture capital investment. You are betting that the world's desperate need for clean, firm power will outweigh the immense difficulties of actually building new nuclear reactors.
So the question you have to answer is, are you buying a power company, or are you buying a call option on the only approved nuclear technology that can actually keep the AI lights on?
That is the multi-billion-dollar question. Because if AI scales the way we think it will, existing power grids are going to break. NuScale is one of the few verified fixes for that problem. But being the fix is expensive, and right now, the shareholders are footing the bill.
It's a race between the cash burn and the energy crunch. And we'll be watching every step of the way. That's the lowdown for today. Make sure you subscribe so you don't miss the next move. We'll see you next time on The Easy Money Show.